Hi traders, and welcome to the Technical Analysis Market Wrap on Friday the 2nd of September. So it is non-farm payroll Friday, and we know generally that the market's going to probably pause for a little bit throughout today's trading session in Asia. But look, the market has certainly moved this week, no question about that. We'll jump straight into the charts and see if we can identify any small trades for today, probably more of a catalyst for where the market's going to go next week. We'll jump straight here to the Aussie USD, and you can see that we've got the look, we've got a head and shoulders that has broken now. There's no question about that. It's a sloping head and shoulders. We've broken down. We got to a low of 67, just below 67.80 really. I'm targeting probably the low 67s on this one. I mean, I could see it getting back to the previous lows with the continued weakness. You can see that on a daily it looks very ominous, but if we do go to a 4-hour, you'll be able to see a little bit of a let me just break this up a little bit, bring it down. You can see that we're getting a little bit more of a sequence of lower highs and lower lows. So it's easier to trade, obviously, on the smaller time frames. But look, this is why we love to, basically draw patterns on the bigger time frame and then go down to the smaller ones. And as an example, you go to a daily and you see, one big break candle and you say, well, how do you even get in that? It is a head and shoulders. Yes, the daily candle broke it, but realistically, it's very difficult to trade. But when you go to a 4-hour, when you've already, that line was already predetermined. It's not like we added it after the fact. And as you can see, when it did eventually break down, it came up, tested it from the bottom, which we're always looking for, the roll reversal there, and then it's sold off, of course. So it's one that potentially could get down another 60 to 80 points. It's one of those ones where it's going to be a little bit dependent on obviously non-farm, because the dollar index is going to have some say into what happens here. But I think from a technical standpoint, it is looking pretty good, and it's done quite well. What we needed to do is either get to the lows now, continue on the selling train, get down to the low 67s. But of course, if it changes around, the catalyst for it moving around and getting up again is getting above that neckline. If it turns around from here and trades up above the neckline, then we'll start to look at short-term longs again. But it's got a little bit of work to do before it does that. My preference is the short. But a daily close above the neckline, so a daily close effectively above 68.50 would start to get me looking long again, and potentially getting up to the 69.50 and 70 cent mark on this one. But pretty good trading right round. All right, over to the US dollar CAD, and this one broke through this week. Obviously, we had the retest of the resistance level that was right through here at around that 130.50 level. You can see that when it came back and touched the moving averages, you can see that it pulled back one more time. I think we were talking about that last week. If it pulls back, even if it doesn't get to the 20 moving average, it could get enough momentum to push through, and that it did. And of course, it touched the new high around the 132, pretty much just above 132 it went, which was the previous high, or the most recent long-term high. You can see that it has sold off a little bit in the last little bit of the session. You can see that we've dropped back about nearly 50 points from its absolute high. Funny one now, look, if you didn't get involved in the long, you were going to struggle. You could have easily got in on this day here. Once this day closed above this level here, you could have easily got in at the 30.90. So there were plenty of opportunities. The candle has just changed, as you can see. The new candle has just started, literally as we speak. And it's going to be one of those ones now where we just have to wait on this one to see what non-farm payrolls gives us. If it's a positive result for the dollar index and dollar strength, then we're going to see a big change in this one, whether it continues on or whether it falls back. Either way now, we have to wait for a daily close above the 132 or a daily close below the current level where we're at, which is around the 131. If we get a daily close below 131, I'd be starting to target the tops of this range again. But when it does get back here now, we're going to be having to be very careful that it doesn't actually find support there and bounce straight off it. I wouldn't be anticipating it's going to go all the way down here, especially not in the first move. So just be really, really mindful of that when if it does get back down here, to look at this level and make sure it breaks it properly before you start shorting it, because it may well just reverse off this level and actually push up and make a new high again. So that's the one we've got to be very careful of here. But good trading again, and it's done all of the things that we wanted to do from a technical standpoint. So hopefully you're able to get involved in that long. But now it's a bit of a waiting game for non-farm payrolls. We have to wait and see what that result is at 8:30 New York time tomorrow morning. All right, we'll move over to the US dollar yen now. Look, this one's broken to a new high as well. We'll get some very key levels being broken here on what is obviously a very, very important day, one of the most important news days of the month. So, it's an interesting one when it does that, because it really gives us a bit of an insight of what the market thinks it's going to do. There's no question this has broken to a new high now, and yeah, we are into the 140s finally. Yeah, it's been promising to do so for a long time, and it finally has got there. Look, I wouldn't expect any big runs today, not until, you're going to hear me say this a lot today, not until non-farms comes out. If the non-farm payroll result is favourable, then this is going to continue on and blast off. Otherwise, it's going to be a little bit of a roll change and come back down and probably test the 138, 139 level in the first instance. Doesn't look like a lot on the chart because it's fairly congested, but that is actually 100 points. It's 100 pips actually. So yeah, that is a reasonable range there. So if it does find the resistance that we think it probably will at the 140, yeah, 139 will be the very first stop. If you really want to scalp and you're looking for a scalping opportunity and you're trying to scalp against the market before non-farm payroll results, maybe look for small shorting opportunities down. Maybe I'd keep them very small though. If you are scalping there and you're going to try and you are counter trending a very strong trend here, so you got to do that with a lot of caution. But if that's what you if you really want to get involved in a trade, that's more likely to get you more pips than the long before non-farm payroll. All right, so hopefully you'll be able to yeah, keep an eye on that and maybe get a couple of very small term scalps if you're really that way inclined. Dollar index, yeah, again, another big move up, broke through this level. It was promising too, wasn't it? I mean, all week you could see that it was trying to gather momentum to break to a new high, and it finally did today. You can see that we're trading above the 109. It got to basically as high as 109.70, which spelt almost doom for the euro. We know the euro is in big trouble now. It's at the do or die level now. It's at the crossroads. Look, this is going to be a very flat day today, I'd imagine. Nothing short of something we can't see being a catalyst for a big move is going to make this move much of a range at all today. The euro is the one. So look, we'll go on to that in a second. But you can see definitely broken to a new high. Signal line still in the MACD line, in the MACD histogram, by the way. So there seems to be enough strength there still building up. This has been great trading. I mean, we're certainly not going to complain about a flat day today when this has been such a good trade for us over the last couple of months, really. So let's go over to the euro. You can see that it's testing the lows at around the low 109. It promised to. We know that it's been technically very good, the euro. We know we've had a really good run on it, which is fantastic. New candle has been broken, but again, yeah, this level is holding around that 99.20 area. The danger here, of course, is that the signal line is still well and truly in the MACD histogram. Dollar index looks like it's about to burst higher. And if it does, this is just going to go and make a new low. No question about that. If the dollar index obviously makes a higher high. We just have to be very careful with this one. It's at the level we need it to be. No surprises that it's here on non-farm payroll day, of course. Definitely no surprise at all. But it's its next move is going to be absolutely critical. Where it closes at New York time on Friday. So if we're doing this, if I was doing a Friday wrap Saturday morning after New York close, and we've got a daily close below the 99. It's going to be a fairly bearish week next week, and you can start to target the. I don't like going and looking for extremes at very low levels on a market that hasn't tested it for a very long time. So I would keep it to round numbers. When you're uncertain, generally round numbers are the way to go. So yeah, a break of 99, I'd be looking for the 98 in the first instance, and that's how I would play it until it finds itself a new base. But absolutely critical. Failing that, what we're looking for is basically a bit of a change of trend. Look, you'll know Monday morning, you'll know there'll either be a green candle here looking solid, which means that we're probably going to find some strength up here. We'll start targeting the parity in the 101 again, or it's going to be a close below the 99, and if it's a close below the 99, we just start to target the 98 level just simply because it's the next round number. Very easy to play, really. Again, this one's been awesome for us. We've had some really good trades on it, been technically perfect, and I'd expect it's not going to be much different. We just have to be a little bit patient on this one and wait for it to hit non-farm. All right, the all-important S&P 500. Look, it came down, touched the 3,900 level, only just very briefly, but it did touch it. It might have just got there. Look, it's one of those ones where we knew this was a very strong role reversal. As far as role reversals go, 3,900 was an extreme zone, no question about that. Like, we had very strong support for the this level here, very strong resistance here, tagged it again there, and again, it's found itself bounding off and basically making a hammer at a role reversal zone. I'm not paying a lot of attention to that hammer, even though it is a hammer and it's powerful and it's at a role reversal zone. when you're before non-farm payroll, it doesn't really make much difference. All it's done is rallied a little bit for the session. That candle has closed now, so that is a confirmed hammer, no question about that. In hindsight, if the non-farm payroll result is really good for the index, then you're going to look at that hammer and you're going to say, wow, what a great trading opportunity that was. And you know what? It would be if it wasn't non-farm payroll day. So I would certainly err on the side of caution here. Let non-farm payroll come out. I'm not big on trading into it. I'd like to see what it does, because look, it's one of those ones, I say it all the time, non-farm payroll could have what should be a great result for the US markets, and it'll sell off on that, or it could be what would look like a bad result and it would actually pick up. So you've really got to let the market decide and let the market work out where it wants to go. And it's extraordinarily simple. If it's a closed candle on Monday that is positive from this level, and maybe even above the 50 moving average, depending on how much it picks up, then we know we can start targeting the 4100 again. And of course, if it's lower, if it's below 3900, then wow, this level opens up. 3750 to 3700 is the next target at that point. And and this whole target too, it's got pretty good support down there as well. So very easy. That's a very easy trade, really. If we get a daily close below the 3900 on Monday or at the end of New York, we start targeting the 3750 to 3700 on the early part of next week. And remember, we are in September, the weakest month of the year historically. So, no real surprise that we're seeing weakness into September. And I was certainly not going to be surprised if it continues. But again, we're not going to preempt that. We've already seen a reasonable amount of weakness. So what we want to do now is let price action and news dictate where we go. So a close above the 50 moving average, we start to target 41.20 and 41.30 to catch up to the 20 moving average. Then we'll reassess at that point. The next roll reversal zone, you can see right through here. So very easy target to aim for. So 41.20 if we get a daily close above the 50 moving average, and a daily close below the 39, and we're targeting the 3700 and 3750 zones. So very, very straightforward. So look, I hope everyone's had a great week's trading. It's been fantastic trading from a technical standpoint, all the things that we talk about and the levels. Hopefully you're able to catch some good trades there. We'll see how non-farm payrolls treats us tonight. Have a great weekend, everybody. I look forward to seeing you all next week.